In this week's episode of the Stockscores Market Minutes, I'm going to explain what I think is the most important indicator for stock traders. I'll then do my regular weekly market analysis. We'll do a market scan in search of opportunity, and I will look at the day trade of the week on SES. Okay, so let's talk about what I think is the most important indicator for stock traders. When I started trading the stock market, I very early on started to focus on stocks that were behaving abnormally. And the logic went like this. If a stock is got something good happening, maybe their earnings are getting better or they've got some fundamental event that has got investors excited, then that event will motivate investors to aggressively buy the stock. And when that happens, it creates abnormal price and volume activity. Stocks go up because investors have found that motivation to pay more. And this is usually driven by some new information. So when investors are excited about a company, they buy it aggressively, and that creates the abnormal price and volume activity. The Stockscores action candle identifies stocks that are trading abnormally. And when we combine that with chart evaluation, the action candle is just really great way to find hot stocks. Now I use it when I'm day trading. I use it for long-term trading as well. Let's start off with an example from the day trading world. This is a stock that was active on Friday and really fit all my criteria. The indicator is the little pink dot there. So anywhere you see a pink dot, that is the Stockscores action candle. And what we want are action candles that break from boring trading where nobody really cares and then they come alive. And so this is the one that matters the most. And you can see on AMD that signaled the stock to make a pretty strong gain through the day for a large cap stock like that. It was very active on Friday, and it all started with the action candle at the open. Now we can use it for longer term trading as well. Here's a stock that's done well over the last few months. And again, there's the pink dot. Nobody cared about the stock the day prior, and then it comes alive, and that starts this market-beating upward trend. So if you want to find action candles on the daily interval, which is what this chart is, the Stockscores Market Scan tool will do that, and we'll do an example of that at the end of the video today. If you want to find action candles for day trading, then you need to follow my active live service where you can see my trading screen through the day, and I have an algorithm that picks out every stock that makes an action candle through the day. There's more information on the Stockscores website for that. All right, so let's talk about upcoming events. I've got a number of webinars coming up in the next month, and if you want to register for any of those, just go to the Stockscores website, go to Trader Training and upcoming events, and you will see a list of them there. If you want me to do more of these type of free webinars, click on that like button right now. The more likes I get, the more likely I am to do some of those events. All right, so let's get into an analysis of the US markets, as I always do each week. And this week we've got an important event that happened on Friday, because on Friday we broke this short-term downward trend line that has been underway since about the third week of September. Now we had a little bit of panic selling, price came back up to the trend line, a little bit of selling during this week and then back up to the trend line, got stuck, but on Friday morning we broke that downward trend line, and that indicates that we're probably headed up towards this all-time high in the next week or two. It could be in the next 3 days, it's hard to say. Price went up a little fast on Friday, and so that's why I think there was some selling pressure at the end of the day. But as long as we can hold above this support zone at about 292, I'd be fairly optimistic about the short-term direction for US stocks. Now looking at the long-term chart, we've got a nice pattern building. This is called an ascending triangle. And what it essentially means is that volatility is compressing, and with each wave up and down, you can see that that compression of price volatility is happening, and that's really a base building pattern. And what happens out of that is you tend to get very strong directional moves. So we're building this. It may take another month or two before we can break out, but typically the strongest time of the year for the market is between sort of November, mid-October, November till May, and we're kind of gearing up for that again. We're building this basing pattern, and as long as nothing really negative happens on China-US trade, I think we see a breakout through that 304 level, and the market should go to all-time highs. Hasn't broken out yet, but something to watch for. On the Russell 2000, which represents US small cap stocks, we've really lagged. You can see that the trend for the last 8 months has been pretty sideways, not a lot of action. And that really is something you feel when you trade. It's not like you see a lot of lower priced, small cap stocks in the US doing really well. We did have a little bit of action here because the market broke that downward trend line. And I do think the small caps will come back to the highs, just like the large caps in the S&P 500 will. But there's still not that real show of excitement that makes me think we're going into a longer term upward trend for the small caps. So if you like to trade those smaller cap stocks, I would be fairly cautious still right now. On to the Canadian markets. And first up is the TSX on the 30-day, 60-minute interval. And you can see that here too. We broke the downward trend line from some rising bottom. So that's a good sign. We pulled back through the end of the day. I think this market probably makes its way higher in the days and weeks ahead, but it probably will have some volatility along the way. Looking at the longer term chart, you can see that the TSX had broken this little, what we call a pennant pattern a few weeks ago. It went up to its all-time highs and then has pulled back for the last few weeks. I think we're going to probably see this reverse soon. My sense is this market will start moving up again. I don't know that it'll be widespread strength. Perhaps certain sectors of this market will lead, but it is about time for it to try to follow through from that breakout from 4 or 5 weeks ago. TSX Venture is really suffering. There's been a real breakdown in the cannabis sector, and that really ruins the psychology for the entire small cap, micro cap market in Canada. So I think this is still a sector to avoid. I've been fairly bearish on it for some time, and it's now getting downright panic selling. That usually comes before a bottom. I don't see any sign of a bottom yet, but something to watch for. But for now, I think we avoid this market. On to currencies. Here is the US dollar. It's of course been in a nice upward trend for some time. Doesn't seem to be any sign of letting up. It ran away from the trend line a little bit. Looks like it may pull back to that trend line near term, but that wouldn't be bad. It just is still in a bullish trend, and so I'm still fairly optimistic about the US dollar. Now the Canadian dollar is interesting. It actually had a pretty good jump on Friday, and I talked about this in recent weeks. We had the break of the downward trend line. Now we've been building a rising bottom, and that strength on Friday on the weekly chart shows up as the market closing near the high for the week. I think we could actually see the Canadian dollar start to inch up toward that 75.5, 75.75 mark on the FXC, and that's a positive. It's not overly exciting, but it does show that the Canadian dollar is stabilizing, and I think a lot of it will depend on what happens with oil. First, interest rates, and of course, we always look at the TLT, which is the bond market, the Treasury bond market, and the TLT ran away from its trend line. It's now worked its way back. It's building a little falling top here. I think we're going to see the bond market come down a little more, which means interest rates go up a little more, not dramatically so, but still something to keep an eye on. I think if you're looking for low interest rates, you're probably going to not see it lower than it was last month for a little while. And so I'd be fairly aggressive if you want to lock in some low interest rates on mortgages, that sort of thing. And on to commodities. Here is the gold chart. Talked in recent weeks about how we had this nice upward trend and then a flag pattern. We need to see a breakout from that flag to indicate that the buyers are back into gold. For now, I'm concerned because we've got this falling top that's formed. We've been inching lower. I think right now you'd be pretty careful with the gold stocks. If we can break from this flag in a positive direction, then I'll get aggressive with gold again. But for now, I'm sort of neutral to maybe even slightly negative on gold. The oil chart, of course, we had that original attempt at a break a few weeks ago. It failed. We've come back into support. I talked about the market for oil being at support last week, and it bounced this week, which is exactly what it's supposed to do. I think we'll see it inch up maybe into this $12 range near term. I don't expect it's going anywhere fast unless there's some really good news on China-US trade, which would be good for the global economy, which would be good for the price of oil. So right now, stable, but no real sign of excitement just yet. And finally, the fear chart. You see fear dropped off quite a bit on Friday as we broke that downward trend line on the S&P. And so the market looking like it's more likely to go higher than lower near term. Perhaps in the next couple of days, we'll see a bit of a pullback, but I think the market wants to move back toward its all-time highs. So my ratings then, long-term neutral on US stocks, short-term bullish. Neutral on both time frames for Canadian stocks, the same for gold, and on oil, neutral long-term but bullish short-term as it has made a bounce. U.S. stocks broke the downward trend line that has been in place since mid-September. This should set up for a run back up to the all-time highs sometime over the next few weeks. Oil has stabilized while gold is drifting. Canadian speculative stocks are really being weighed down by that weakness in the cannabis sector, and fear in general in the market is falling. All right, so let's jump over to the Stockscores Market Scan and do a scan for stocks that were behaving abnormally on Friday. I can go into the Market Scan tool, and for this, I like to run my scans individually on the Canadian and US markets. So I can run the Abnormal Breaks Canada scan and click on this. And I've got 6 stocks to look at. And then I go through those 6 in search of stocks breaking from good patterns. Now these charts are a little small. If you want to see a larger view, click on Slideshow and then click on Large Chart. And now you can see kind of a full-size chart. And this is where, if you've got a little more time, it's better to look at those large charts. So the first thing that this one shows me is that there's a little bit of weakness in the gold miners. This is an inverse ETF that goes up when the gold miners go down. And you can see it had a bit of a jump on Friday. I don't think it's clear cut, but it does seem like another sign that gold is topping out and money is coming out of those gold miners. Not a strong signal yet, but something to watch for. Chorus Entertainment, I like this chart. You can see the downward trend line was broken here. We've built a rising bottom, and now we're breaking from a rising bottom. You can also see that volume is increasing. It's a good chart, not a great chart. I'd give it a 6.5 out of 10. Moving along, we only have 6 stocks to look at. This one, don't love it. It's going to find resistance here at this downward trend line or at horizontal resistance. So I think that it's probably best left alone. This one not breaking through any kind of resistance, so I'm going to leave that one. And then finally this stock, I would say the bus has left the station on this one. We had our abnormal break back here from a low volatility compressing chart pattern. And so now you're getting the reward for having taken the risk back there when we had that action candle. All right, so on to the day trade of the week. This is an example of a stock that met the criteria of my day trading strategy. And again, this is all done through our active live service on Stockscores. This particular trade is a really nice one because it didn't take a lot of capital. To take $100 of risk on this trade required a position of 270 shares. The entry point was right there on the action candle. There's a little pink dot there. It's hard to see. And at that point, that 270 shares was a $991 position. But of course, because the stock is over $3, you can margin it 3-to-1, which meant that it only required $330 of capital. Now it ended up making 4.9 RR, which was a $490 gain, which represented a 148% return on a one-day hold. That is a great day trade. All right, well, that has been the Stockscores Market Minutes for October 14th, 2019. Please click on the subscribe, hit the little bell icon, and you'll get email alerts when I upload a new video. If you want more videos, click on the like button. I'm happy to do more. Leave a comment. Most importantly, trade well.